Hello, today we are solving Jan 2023 Unit 2 question number question number A, question number 5A, part 2. Calculate the break-even point for the printers for the year in the sales revenue. So in the first part of the question we had calculated break-even point in terms of units, in terms of sales units. How much needs to be produced so that there is no loss or profit for Cherry-Avocado PLC, who produces printers for computers. Now in this part of the question we need to find break-even point in terms of sales revenue. Okay, break-even point in terms of sales revenue is going to be equal to the number of break-even number of units times the selling price, right? So if I were to produce break-even number of units, okay, the break-even number of units, okay, the formula is going to be break-even number of units produced, okay, times the selling price at which you are going to sell. So that is going to be equal to break-even number of units we had calculated. It is 56250. 56250 units needs to be produced times selling price is 95 pounds they are selling. Okay, if I sell it at 95 pounds, then that is going to be equal to 5,343, okay, 343 750. So 750 pounds. So this is the amount of revenue when I am going to sell at the break-even number of units. This is the revenue earned. Okay, the revenue that's going to be earned if I were to sell at the break-even number of units. Now this next part of the question, part B, calculate the margin of safety in terms of sales revenue. Okay, what is the margin of safety? It is the actual sales. Okay, in terms of sales revenue, here they have given in terms of sales units. So let's calculate both. First one is the margin of safety in terms of sales unit. It is nothing but how much is the break-even actual sales minus the break-even sales in units. Actual sales in unit minus break-even sales in units produced. That means, okay, actually I was able to produce 75,000, which we had calculated because they had given a sales revenue. Okay, so 75,000 units were the actual units produced, but break-even means which you had calculated that if you were to produce the break-even number of units, there is no profit and loss, and break-even number of units is around 56250. It is around 56250 units. Now that's going to be equal to, let's calculate what is the number of units. Okay, if I were to produce at the break-even, actual minus the break-even where I am safe. Okay, so 75,000 units minus 56250. So this represents a point, okay, from where the actual sales can fall up to the break-even point and you are literally safe in the business. Okay, so that is going to be equal to 18,750 units. Okay, this is the margin of safety in units, by how much it can fall till you reach the break-even point. Now you need to calculate what is the margin of safety in sales revenue. Okay, you calculate both and give. So margin of safety in terms of sales revenue is going to be equal to the margin of safety in units times the selling price. Okay, so that is going to be equal to, so you can also, okay, so that is 18,750 okay, 18,750 times the selling price, which is in 750 times the selling price, which is at 95 pounds. It is going to be equal to 17, okay, so times 95 pounds, okay, is what I have to sell. So that is going to be equal to 1781, okay, 1781 250,000. So the revenue can fall safely from, okay, from 7,125,000 to 5,343,750 pounds by this much amount. That's the margin of safety. By this amount it can fall till it reaches the break-even revenue. That's what we had calculated in a margin of safety in terms of sales unit and margin of safety in terms of sales revenue. Okay, there has been a mistake here and here, so you calculate both and keep. Then margin of safety as a percentage of sales. So margin of safety as a percentage of sales will be equal to the difference between, okay, the difference between the actual sales in revenue, actual sales in revenue minus the break-even sales in revenue, okay, divided by the actual, okay, divided by the actual sales in revenue. So as a percentage of actual sales you will calculate, okay, so that is going to be equal, and you will multiply it with 100, so to get as a percentage, okay, times 100. So that's the margin of safety as a percentage of sales revenue, actual sales done, okay, as a percentage. Now actual sales in revenue was 7,125,000, okay, minus break-even sales in revenue, it was equal to 5,343,750, okay, 343,750, okay, divided by the actual sales, which is 7,125,000, okay. This entire thing I will have to multiply it with 100 at the end to get a percentage after calculation, okay, times 100. So that is going to be equal to, this is nothing but 1781, okay, 1781,250 divided by 7,125,000 times 100. So that is going to be equal to 25%. So this is the margin of safety as a percentage of actual sales